Joining us now is Dave McJanet, HashiCorp's CEO. Dave, good to see you. Help me understand what happened in Q1. As analysts pointed out on the call, you had been holding up so well in this environment of optimization in the cloud, but now it's hitting you.
Hey, John, good to see you. Yeah, I think, as we shared on the call, we had a solid performance quarter Q1. But what we, on both the revenue side and the EPS side, what we tend to be aligned to is, the budgeting cycles of the 2,000 or 3,000 largest companies in the world. And I think, in a word, they're demonstrating a good amount of caution. And I think that is what we communicated. What that tends to do for all software companies, and we're no exception, is extend sales cycles for those organizations, and that's really what we communicated, and that's what we're expecting to see continue for some period of time. That being said, it doesn't change the level of interest there is at the top end of the leading indicators of the funnel. That is as vibrant as ever. I've been traveling a ton over the last couple of months, and the leading signals are all as consistent as they have been for several quarters. But what's just taken a bit more time is progressing those things through procurement. I think that's what we communicated with our guidance yesterday.
An 8% cut to the workforce seems to me like an indication that you expect this process to take a while, though. Am I wrong in that?
Yeah, I think we have to keep that in context. Obviously these are difficult things for us to do, but we feel necessary to do as well as a responsible management team. I think as we communicated over the last couple of years, we've been in an investment cycle. We have massively grown the scale of our workforce over the last 4 quarters. And that was in the anticipation of a particular economic environment. And what we've seen is, the actual environment that has transpired is a bit different from that. The interest rates having risen as much in the last 6 months as they have in the last 30 years has thrown a dose of caution to big infrastructure investments. So as sales cycles extended, we've had to take the unfortunate position of reducing some of those roles. But it doesn't change the long-term outlook. I think what you see for us, our products play this critical role in the transition to cloud for the biggest companies in the world, and those things are not changing. That cycle's not changing. So what you're seeing really is there's some optimization of people's cloud estates, but which is bringing the revenues down on things like the hyperscalers to some degree. But at the same time, there's this push for more and more things going cloud, and we think that's the enduring trend that we're aligned to, is that long-term push. But we're in an optimization cycle.
Are you in the position where customers were overbuying during a certain period of time, whether, certainly not intentionally, but it seems like certain enterprise software, and we've talked to Snowflake about this a bit as well, we're in position where people could buy a bucket of consumables, and they're buying larger buckets before and smaller buckets now as they really need to conserve. Are you in a similar position?
I think every software company is seeing the same thing, to be honest, which is, whether you're selling a consumption-based model or like Snowflake, or an entitlement-based model like we do, it's very normal for large organizations to procure the entitlements that they think they're going to need in the next 6 months, 9 months, whatever it might be. So in a sense, yeah, you're buying in advance. In these optimization cycles, there's pressure from finance teams to say, okay, just buy what you need for the next 30 days, and we'll come back to you in another 30 days. I think that causes a sort of slight depression in expansion rates, a slight slowdown in sales processes for everybody. And so, yes, that is a general trend that happens in the software market, but it's a little bit like just a digestive period that needs to pass. Once you get through that particular optimization cycle, you will return to normality.
Are we seeing a flow through of the consumer slowing down, perhaps not in travel and certain services, but in core retail and some areas like that, going through the customers and then eventually hitting enterprise software players such as yourself?
It's a fascinating thing to observe, actually. I think the caution that you're seeing in the capital expenditures for these biggest companies in the world is predicated on uncertainty about their own businesses. And that is a direct tie to the consumer, in that they're saying, well, I'm not sure what will happen in the second half of the year. People are talking about a slowdown. Therefore, I'm going to be cautious in my capital investments in the next little bit. And as it turns out, the consumer's actually been incredibly durable, but their budgets were set predicated on the assumption that there would be a slowdown in it. So I think that's a little bit what you're seeing, is sort of this standoff expectation of of slowdown in the consumer, but in fact, there hasn't been much of one. But on the B2B side, yeah, it's actually caused a slowdown in capital acquisition. So, I'm not an economist. I have no idea how this flows out. I think what you see us trying to do is control what we can control, understanding that this is a cycle, and the consumer plays ultimately the controlling role. But their long-term secular trends remain unchanged, and our responsibility is to build a business to reflect, both the current moment and what we think best suits our partners and customers as we think about the next several years ahead as well.